Fantastic. Hello, everyone, and thank you so much to the NFT.NYC team for putting on an incredible event. As you can tell with all of my wristbands, I've been to plenty of events throughout the week, and it's only Wednesday? So my name is Kalah Haley. I'm the CEO at St. Rock Media, an events and NFT studio, and I'm excited to present to you all a case study. I've been in this space since 2017. One of my producers at the time introduced me to the blockchain and said, you need to understand what's going on. And at that time, I really took a deep dive. I took the red pill and started to really understand what was going on with this technology. And then obviously in 2021, as the world became hip to NFTs and smart contracts, it was exciting to re-engage in the space and start participating in a number of projects. And I think at that time I recognized, oh wow, there's so much opportunity here. How are we participating and making sure that we're giving back to the communities outside of the participants directly holding these NFTs? And so I started to think about this. I started to pay attention as I was participating in the market. And these are some of the conclusions I came to. So this is markets and meaning. Successful NFTs are not donations. Ooh, spicy take. Okay, so this is a blind case study. I'm not going to disclose which either of these projects are. So anyone who can guess or come up to me afterwards and tell me project A or project B, bonus points to you, and you'll get a shout out on Twitter. All right, so the first project, NFT A, is a donation-first project. A couple of specs around these projects. They had really strong primary sales, so they sold out during their mint, and they had relatively weak, and I'll let you come to that conclusion on your own, secondary sales. A little bit of data around that project. This project had some unfair advantages. They had the celebrity project that, celebrities who were really pushing the project. They had influencers who were really pushing the project, which is great because at the end of the day, this is for charity, and they raised, as you can see, $2 million. This project, again, the mint, it was 0.05 ETH, and 100% of the proceeds went to charity. So again, they raised $2 million. Yeah, clap it up. That's huge. That's amazing. That's amazing. And this was just around Christmas of this past year. So both the timeline of both of these projects are essentially like a week apart from one another. Going into the secondary and all of the royalties involved, this donation-first strategy, their current floor price, I'm sorry, I said floor price, I know, 0.023 ETH. So if you're trying to do some quick math, that's about 50% the value of the mint price. And again, 100% of these proceeds are currently and were going to charity. And just so you know, the creator fee is 10% for both of these projects. All right, transitioning into project B. This is a utility and art-driven project. Again, strong primary sales. They too sold out on their mint price, or on their mint. And then they also had relatively strong secondary sales. So let's keep the story going here. This project did not have any kind of celebrity backing or big influencers. In fact, to this day, they still have less than 10,000 members in their Discord. And so looking at, again, some of these stats, their mint was also 0.05 ETH, and 20% of those proceeds went to charity. On the secondary, their floor price is currently at 0.199 ETH, so round that up to 0.2. So they've increased 4x since the time that the project began. At one point, if you look at the chart and you squint and you can look really closely, they actually at one point had an all-time high of just over 1 ETH. And again, 20% of these proceeds are going to charity, and it's a 10% creator fee. Okay, so what is kind of the result of these two projects? NFT A, as you might have imagined, with 500 ETH for the primary sales, for the mint, They've currently traded in secondary 443 ETH. Secondary sales at that 10% come out to 444.3, and a total to charity was 544.3 ETH. So clap that up again, please, just like context. This is amazing, like raising a lot of money for charity. Very exciting. NFTB, primary sales, 500 ETH. Again, 20% of those went to charity. To date, they've had 4,400 ETH in total secondary trading volume, which means that 440 of that went to the project, and then 20% of that went to the project, to the charity. So a total of 188.1 ETH. Again, please, let's just like clap that up, because I know it's in red, so it's confusing, but it's also like positive, so let's not get confused. So what? Right? I'm a scientist, so I'm always like looking at data and trying to understand like the underlying story here. So a couple of things. This is a bit of a nuanced take here. So NFTA has raised to date 3 times more for their charity than the utility art first model. And that's specifically primarily from the mint, right? Which is a one-time event. However, NFTB has raised twice that amount just in secondary alone. And that is an ongoing, and that is in perpetuity. People participate in NFTs, whether we like it or not. People participate in NFTs with keeping in mind that over time, over a long enough time horizon, those projects will appreciate in value. I think it's not a surprise to any of us. It is a bonus if the project supports a meaningful cause. And so I apologize to any altruists in the room, but here we are. The Utility and Art First project brought value to both NFT holders and the charities that the community supports. And so I think that this is a bit of an interesting concept. I imagine a lot of us, for those of you who are in this room, you're here because you have projects or causes that you want to support. But I'm kind of thinking through and trying to understand what is the best strategy and approach to accomplishing that. I've got 1 minute left. If nothing changes, I did the math. If nothing changes, even considering the current bear market conditions, NFTB will surpass NFTA in 24 months in total amount raised for their charities and causes that they're supporting, right? Some takeaways. So if you are a nonprofit, I would ask that you consider developing an NFT project for the market first with meaning, and you will have a greater impact for your cause. Number 2, if you're also a nonprofit. Partner, if you're saying, okay, well, it's a lot. There's a lot of, people hours involved in designing and creating a project. It's okay, there's another option for you. Partner with one of the many amazing NFT projects out there, and there are plenty if you've not checked OpenSea recently. Lastly, if you are an NFT project, this is my fundamental belief, especially with the trend of 10K PFP collections, we're really creating the first people groups of Web3. And so my belief and thesis is that communities are born and raised, not built. And so what kind of characteristics are we infusing into the communities that we're creating? One of the things I would love to see is to infuse generosity into the ethos of your group and to write the wallet addresses into the smart contracts of charities that your communities can really get behind and support. Generosity could be as contagious as the zombie plague as long as enough people are willing to be carriers. Jonathan Mayberry. And so, again, I am really passionate about making sure that we onboard many, many users and people to understand the benefits of blockchain technology, smart contracts. But the question is, can we onboard the world through generosity? Thank you. Thank you.
Thank you, Kate.